Okay, so we are going to start looking at motivation, and we're going to start with the obvious place, which is with pay. So by the end of this and the lesson that follows, you should be able to understand why people work, the different pay methods that are available, and you should be able to calculate the pay of an employee. And we'll do that in the lesson. So we start off with then, why do people work? It may seem an obvious question, but it is all linked to motivation. So motivation is all about encouraging workers to work hard and well. A highly motivated workforce will help the business increase productivity and meet its objectives. So what we're trying to do here is look at it from the business's point of view rather than just the workers. We know that workers want money and other things out of work, but a good business will want to motivate its workers, and money may be one way to do that. Okay, now the whole idea of motivation is you have to understand why they're at work and then use that to help motivate them. So there are more reasons than just pay. So it might be that you go out to work to meet people for money. It could be to stop your boredom. It could be that you want recognition for your achievements, so you're actually doing the job because you want to be recognised as the leader in your field. Or it could simply be just respect from others. Okay, so as part of your job, it comes with the respect that comes with it, and that's why you go out to work. Now, ultimately, as I've said, most people are working for money. Therefore, you need to be able to understand the different payment methods that are available, and there are 7 we need to have a look at. So we'll start with the most obvious, is the time rate. This is the one that you probably know because it's the one where you're paid something per hour. So as it says there, the workers are paid a set sum for the time they spend at work. £7 an hour, £10 an hour, whatever. But of course with this system, workers will have to clock in and out so that the time can be measured, and also you're usually contracted for a number of hours rather than how much work you do when you're there, which sometimes can mean the quality is not great because you're being paid for your time, not for the quality of your work. Now normally linked to that is the second method, which is overtime pay. And as the name suggests, it's the pay you are paid for working over the time that you should be there. So if you're paid to work 16 hours a week and you work 18 hours a week, those 2 extra hours are overtime. Okay, now the thing with overtime is they normally paid more than the normal time rate, and it's usually what we call time and a half or time and a quarter, which basically means if you're paid £5 an hour and your overtime is time and a half, you're paid the £5 plus another half, which in this case would be £2.50, so your overtime rate is £7.50. Okay, so whatever the bit is on time is your normal rate, and whether it's half or a quarter or even double time, it just means that that's how much more you're being paid. Now obviously from a business point of view, as the bullet point says there, this is going to cost the firm more money, but only in the short term. And obviously the reason you're paying overtime is probably because the business is busy, so hopefully the increased sales will pay for the overtime that you've had to do. Okay. Next to then, another one you're probably aware of is a salary. Now, this is when workers agreed to be paid a certain amount for the year, and then it's just simply divided into 12 equal monthly payments. So you might hear people say that they get paid £24,000 a year. Well, all we do is then take that £24,000 and divide it by 12, which is 2, and that employee would be paid £2,000 every month. Now the problem with that is it doesn't reward you for spending more or less time at work. So therefore it's usually used for jobs where it's hard to measure what somebody's done. So you often find it with professional people, accountants, lawyers, doctors, teachers and so on, because you can't always gauge how long they've been at work, or they might need to be work longer one day and not as much the next. So they're just paid an amount for the year and divided it up. The fourth way then is piece rate. This is based on how much a worker produces. Now, time rate was based on time, how much time you spend at work. Piece rate is based on the number of items you produce while you're at work. So the more you produce, the more you get paid. Now, that tidies up some of the problems we had with piece rate, but of course, if you want to be paid more, you may rush, and there may be quality issues and problems associated with that rushing, which then mean that the business is not going to make as much money. So you've got to be careful at deciding whether to use a time or a piece rate, and obviously a piece rate is only really going to work in businesses where they're producing something. Okay, so next ones, we've got commission. Again, you may have heard of this again, and this is where it's normally associated with sales, because you get a percentage of how much you sell. So if you manage to sell £100,000 worth of cars, okay, you may get 10% of that into your wage, or 20% of that into your wage. Okay, but of course, a bit like the piece rate and the time rate, it has to be in a job where it's easy to judge how much has been sold. And of course, as we all know, what you then end up with is really pushy salespeople, because if they don't make the sale, they don't earn the money. So you have to be careful you don't annoy your customers. Now, the other method we've got there is a bonus. Now, a bonus could be applied to any of these other methods. This is extra, usually for meeting a target. So you may be paid a commission, a salary, a piece rate, or a time rate, but you may get a bonus on top of that. The key thing with a bonus, though, is it has to have been attached to a target. You don't just go around handing out bonuses. You have to receive a bonus if you've reached a specific target. So at some point in the year, somebody would have sat you down and said, if you can sell £200,000 worth of stock this year, we will give you a bonus of £10,000. Okay. Now, you may or may not reach that target, and it won't be your main pay. You still would have been paid for your job, but if you manage to reach that target, then you get paid a little bit more. The final method then is profit sharing, and again, this is a bit like the bonus, is it's usually on top of what you're already paid, but what we're doing here is, after the profits of the business are calculated at the end of the year, it is then shared out between employees. Now, what this tends to be with is for management, because the argument would be that management have made the decisions that have helped make that profit. And obviously it means that everyone should be working towards and making decisions appropriate to how to achieve those sort of profit levels if they know they're going to get part of it. Okay, so they're the main methods. You then have to be able to put them in a pay slip, and you can see that here. The pay slip has got lots of different things on it. On the right hand side of this payslip, we've got all the deductions, so this is what comes out of the employee's pay, and on the left hand side we've got everything the employee has been paid. You'll notice at the top we've got the date and the period that it's applicable to, so this was for October. The name of the employee and an employee number. The employee number is like a reference number. It will match up with the files in the filing cabinet and the files on the computer, so everything for Susan Smith is kept together. Now, the gross pay indicates how much they were paid before anything was deducted. So this person was paid $450 as a basic pay, so that's probably worked out on a time rate. They're then paid an extra £300 for piecework, so they're obviously also being paid for the number of items they produce. And there was a £50 overtime payment in there, so the $450 plus $300 plus $50 comes to £800. On the other side, we've got income tax and national insurance. They're both taken by the government. They help pay for schools and hospitals and defence and judges and everything like that. You've then got the pension that they pay into. That's a private pension. So the 82 plus the 19 plus the 15 come to £117. And then the 800 gross, take away the deductions of 117, leave you with your net pay, you can see in capitals, of 683. And that's the basic calculation, and we'll go through more of that in the lesson. The last part I want to consider, which also has a monetary value, are what we call fringe benefits. So these are benefits over and above the wages. So you get paid and you get fringe benefits. Now the key is here is they're given to the employees instead of money, and there's a reason for doing that. It's because they don't have to pay tax on them if they're items. It's only tax is paid on your pay and the money you earn, so your fringe benefits don't go through your pay slip. Now there are a few types of fringe benefits. It could be a pension scheme, it could be staff discounts, it could be life assurance, so there's special deals in there. But of course the ones you're most familiar with are probably a company car or company laptop, phones, and especially now with tablets and so on. And also private health insurance, perhaps again more for the executives. But they're all ways of, if the business pays for it for you, you don't have to. So it's classified as a benefit, but you don't have to pay tax on it because it doesn't go through your pay slip. Okay, that's the basic theory. We will calculate your pay and look at how these changes and deductions and everything works in the lesson. So make sure you go back through this, have a look at all of the different methods again, and get them straight in your head so we can then work with the calculations during the lesson. Also, there should be a Zondel quiz on this. If it's not up straight away, it will be by the end of the day. Okay, and I will see you in the lesson.